Alright, good morning everyone. I'll kick it off here. Alright, okay, you can see there, Friday, we had a huge rally on the S&P again, 2 days in a row. We've tacked on about 50 plus points in 2 days on the S&P. Every sector up on the day. All indexes going, all happening, and that came despite lower than expected non-farm payroll numbers. What I think is really important about that is that those non-farm payroll numbers, even though they were weaker than expected, they weren't all that bad. And I think people were worried about a really bad number, especially with considering the effects of the weather and how they would have impacted that number for the month. So all in all, I think people were able, the market obviously was able to shake it off. And the other thing that I think is really important about this, between the day before we had a nice little rally and then, Friday being able to follow through, I think it gives you a little bit of insight into what was happening. We mentioned, I think on Thursday I came in and I was, I mentioned in the morning call, I've never seen so many people calling for a crash. People were just so bearish, and I think that the last couple of days have shown you that that markets, especially markets like the States, and some of the markets that have been stronger, people are short, or had been short as of a few sessions ago, and it's caught people quite badly. So, that's something that we're going to continue to monitor going further. On a day-to-day basis, we're going to try to assess how the market's actually positioned, because at the end of the day, that's what impacts the market almost more than anything. We also had FOMC Richard Fisher on Friday stating that economic momentum was in fact picking up, and despite the unimpressive labor market, and they're likely to continue to scale back on the monthly asset purchases. So I don't think it really. I think that just reiterates the fact that even though the number was a touch soft, they're probably not going to change anything anytime soon. All right, in Asia, nice bounce across the board in Asia, especially out of Shanghai. Second day in a row that we're open after the Chinese New Year. 2 days in a row with Shanghai managing to push higher. If Shanghai can rally, then I think the rest of the world could probably end up having legs. And Nikkei also a decent little bounce. Aussie trading up over 1% as well. So all in all, good session out of Asia. And a little bit better than expected trade balance data out of Japan as well this morning. So all right, in the corporate action front, bunch of upgrade downgrades out of some of the brokers here this morning. Barclays being the one that's doing all the movement. Trueworth, which was cut to underweight versus equal weight at Barclays. SPAR raised to equal weight at Barclays. Massmart rated new underweight at Barclays, the price target of $96, and Clicks rated new equal weight at Barclays. So, how significant that's going to be, probably nothing too significant. Obviously, just getting a little involved in the retailers there. All right, like we said, we had the trade balance numbers out of Japan this morning, which is a little bit better than expected. We also have industrial production coming out in France later, manufacturing production in France, and industrial production in Italy. So very, very, very little today in terms of market data to actually pay attention to. We're coming off the back of a couple of days of big rallies. So, obviously futures are up at the moment on the open, and we'll have to see if we can continue to have some follow through on the back of that on our session and in Europe as well. All right, let's look at the US dollar yen, and actually just back it out to 2 year here, just so we can see a little bit more that the longer prevailing trends. And I think what's important here is that let's actually just draw it like this. We've kind of broken out of the steep downtrend that we were in here on the yen, as you can see there, and just popped our head above it. But I think what we're really going to have to see is us get above this sort of trend line, which would take us all the way up to about 103.5 to really say that we've broken out of the downtrend. But bottom line, we have been flagging, and you can see if we just shorten it up a little bit more again, that we've really made a reversal to an extent here in the U.S. dollar yen, which is what we talked about being one of the most major leading indicators out there at the moment. And the fact that we finally made this reversal, I think, is very, very positive. You know, we talked about positioning markets. We know guys are positioned short yen, and so you know this is one of the things that's going to give you an idea of where we're going to go in the future. We're going to continue to watch it on a day-to-day basis. But yeah, nevertheless, I mean, we're bouncing up nicely off the lows, and I think as continues, we can continue to play alongside of the equity market for that foreseeable future. All right, the next one we're going to look at is Anglo Gold, which we looked at a million times here. But what I think is important is we closed more or less right at this level. We closed actually a touch through it, 164.33. We're looking at about 163. You can see we closed just above it, but it's one of the only days where we've actually gotten a close above it. If we look at the U.S. dollar price, we finished up 3%, which puts us up equivalent about 169 here locally. And we've definitely, I think, to an extent, popped up over a significant level here, which is right around 15. Right at 15 exactly, actually. We closed at 15.32 in the States last night, so I think the Anglo Gold is kind of making a bit of a breakout here. There is another little level to worry about, but that's, you know, it's a whole dollar higher, which is a lot in terms of rands, and it's about 16.40, call it. So yeah, I think we're obviously going to pop up through that resistance level in Anglo Gold this morning. If we go back to the actual local chart, I mean, you've got to actually go quite a ways back before we're going to find where we're, you know, what it's going to end up being our resistance level on that. So just keep that in mind. This could be, you know, we could end up having a real rally off of these lows. I mean, it absolutely collapsed, you know, into from 300 and what is that, 380 to to 120. So it looks like the first thing I would look at for a number is maybe closer to 175 in terms of trend resistance, for that to be some sort of an area where you can maybe look to fade this thing if that's of interest to you. All right, next one, we'll stick with the gold theme for just a second, and we'll look at GFI. And GFI, you can see that we'll just shorten it up a touch as well. GFI really kind of around this 40 level is looking like some sort of resistance. You can see there we traded 1, 2, 3, 4, 5, about 7 or 8 sessions in a row, maybe even more, right up against this 40 level, and have been failing it consistently. Just for some reason really underperforming on this share. I don't know if it's because it's not getting the impact of the weak rand, because this is all the international assets. But if we can pop above 40, then this thing I think can actually really get going. So just keep that in mind with Anglo Gold breaking out. This one starts to trade a little bit above 40, then I think maybe you can jump on the back of this one as well. All right, Naspers. Actually, just going to shorten Naspers up just a touch here. You can see, I mean, it's kind of an odd pattern, but we have been in some sort of a descending trend line to an extent, going all the way back to maybe mid-January now. And we popped out to the upside of that. We closed at 11.41 on Friday. Now, this isn't like a classic flag or anything of the sorts, but bottom line is we've definitely broken out here to the upside of this pattern. I think above 11.80, obviously we can really probably pick up a little bit of steam and flush out some of the shorts that have been put on there if it gets above 11.80. All right, Barlow's. Barlow's, just reiterate this level at $100. We know how big this is. We made a nice little pullback into this 100 Rand level on a flag and have nicely broken up above it. So maybe a little bit of a pullback to some sort of support here. Might not be a bad place to have a nibble there on Barlow's. And then Woolies. Also just wanted to point out this level. We'll draw it from the closes here. Well, let's draw it from the wicks. Wait, sorry. Let me just go back 2 years. Okay, let's just, yeah, I mean, more or less, we obviously know support is right here around somewhere around 59, 60, 58 to 60 bucks. But yeah, that's the sort of level that we were looking at the other day in terms of support. And you can see there that we've really started to turn back to the upside. And I think that that's important. The fact that we've managed to make a bit of a reversal now. And finally get some sort of bounce. I would say first level that we'd be, or the main level that we'd be looking for some resistance to come in is going to be up here closer to 68.5, 69, which would probably be close to a 50% retracement from the sell-off that we've had over the last month. And that's it for today, guys. Thanks a lot.